What's going on, guys, and welcome back to my YouTube channel. My name's Antonio. Most of you might know me on Instagram as Ants Analysis. And first of all, I just want to say thank you so much for 10k subscribers. I'll be sure to keep posting as much as I can and providing value to you guys every single week. In today's video, I'm going to be showing you a really simple way of how you can trade within an uptrending market. And as always, before we jump into the video, make sure you hit that subscribe button so you don't miss any more content. I hope you enjoyed this video. Let's get straight into it. Right, guys, so to start with, I'm going to really simply break down what an uptrending market is and how we would look to trade it. So an uptrending market implies that buyers are in control of the market. We are forming higher highs followed by higher lows, followed by higher highs, followed by higher lows, okay? And this is just telling us that buyers are in control of the market. And as a trader, we should only be looking for buy positions, okay? The probabilities stack in our favor when we look for buy positions. Now, when would we look to buy this market? Now, it's very simple. Obviously, the most optimal time to be buying this market would be at the end of the pullbacks, okay? So when price pulls back at these higher lows, this would be the most optimal time to be buying the market. However, it's not that easy. And in fact, a lot of people think that catching the low points at the very bottom means it's the best trade and you think you get the highest risk to reward ratios. But I'm going to show you now why it's actually not true. And it's because at the end of the day, we actually don't really know when the end of this pullback is going to happen. Because until we break the most recent low point here, this market is still uptrending. So we don't know if price is going to pull back to here and then continue, or if price is going to pull back to here and then continue, okay? So we don't know when this is going to happen. We don't know when the low point is going to take place. So trying to catch the bottom is very, very difficult. And let's say we do catch a bottom within the market. Let's say we buy the market here. We don't have anywhere really to put our stop loss below. The only logical place to put our stop loss below is the most recent higher low point within the market. So let's say traders were to put their stop loss below here and their targets were, let's say, here, your risk to reward ratio is going to be very, very small. And okay, yes, your stops are in a safe place, but you really want to be optimizing your risk to reward ratio. And I'm going to show you how you can do that, but how you can also do it by increasing your probability and being able to jump on the trend at the right time. So let's discuss that now. So when price is pulling back from this higher high, we want to be jumping down to the lower time frames to really, see how the market is pulling back. And most of the time, the market is pulling back within bearish market structure. We are forming lower lows followed by lower highs. Now, if we were to catch the end of this and we buy the market here, technically the market is still downtrending at this moment in time. The market is still moving towards the downside. So by taking a buy position here, we're actually going against the short-term trend, which can obviously prove risky, and we want to be waiting for a shift in market structure. So that is exactly the way I look to trade. So when the market is downtrending like this, I am waiting for price to shift in market structure, okay, form a higher high. So this is a higher high which has broken the most recent low point here, okay, the lower high. We've now broken that. So this is giving me my confirmation that the bullish impulse move is going to take place, okay? We now have identified that this pullback is over. And I know what a lot of you are thinking. If we enter the market now, it's a lot worse and we'll get a smaller risk to reward than if we were to enter down here. However, I'm going to show you how that's not right and how we actually can increase our risk to reward by being more patient within the market. So after we get this confirmation of a breakout, I will then be looking for structure to form in the form of a pullback, like so. And then once we get that, that is where I'll be looking to take my entry point. Now, I'm not going to be putting my stop loss below here. The reason for that is because we now have structure that we can put our stop loss below, which is here. Now we've broken out of this most recent lower high within the market. This now becomes our new low. Whereas this was the most recent low, if we were entering the market here, this was the most recent low, so we had to put our stop loss below here. But now we've had this extra confirmation not only is our trade more probable because we've waited for extra confluence that the market has broken out of this downtrending market, we've also got a better entry in an area to put our stop loss below. So if we put our stop loss below here, we can see how our risk to reward increases massively. And then we look to catch the following move towards the upside. So that is exactly how I would look to trade. We want to be jumping down to lower time frames and seeing this bearish market structure on the pullback, waiting for that confirmation of a breakout, creating a new higher high, and then allowing structure to form for us to then enter the market. So guys, not only does this increase the probability because we've waited for extra confirmation, but it will also increase our risk to reward as we now have a place to put our stop loss below. So just to summarize this, when you are looking to trade the market, you do not need to be first into the market. Being first into the market does not necessarily mean, more profit. If you be more patient, you can actually increase your risk to reward. Whether you get in later or even later on down the line, you can still catch a higher risk to reward than the person that got into the market early. But anyway, guys, that's a really simple breakdown. I'm now going to jump onto a live chart and show you a live chart example of how I would use this. Right guys, so here we are on a live chart example. This is on the euro against the Canadian dollar on a 15-minute time frame, and I'm going to be breaking down how we can look to get a better entry on an uptrending market. So price is obviously bullish right now. We're forming higher highs followed by higher lows, and we are looking at this pullback and we're trying to see where we can catch our entry. So we have this pullback within the market, and where most people would look to get into the market would be down here. Okay, let's say that the most optimal time on paper would be to get in at this level down here. However, we do not have anywhere to put our stop loss below. The most recent low point is down here, and technically price is still bullish whether we pull back down to here. So the only logical place to put your stop loss would be underneath this low point. And as you can imagine, and as you can probably see, the risk to reward is not quite there. This is only a 1 to 1.6, which, it's not a great risk to reward. We really want to be catching higher risk to rewards than that. And for catching such a great position in the market where you're catching the low point, yes, it's a great trade. It doesn't go into any drawdown. It goes straight into profit. However, that's not what trading's about. So the way we do it is exactly how I broke down in the previous example. Price is forming bearish market structure on this pullback. Okay guys, we are technically trading to the downside, and during this phase, sellers are in control of the market. So we want to be waiting for confirmation that price has switched and we are now in our bullish continuation. So just like how we broke down previously, this is the most recent lower high within the market, and we wait for that to be broken. And now this move here is our confirmation that buyers have regained control of the market and we are back moving in bullish market structure. So when this move takes place, there'll be a lot of people in the market thinking that they've missed the move and that they won't be able to catch, a good risk to reward. But like I said, being patient and waiting for the extra confirmation is actually a good thing. It not only increases your win rate because it's now a more probable trade. Now we've broken out of structure, but it will allow us to catch a higher risk to reward because we now have this previous structure to put our stop loss below. Okay, so this structure is now our most recent low point. So we wait for price to make this pullback, and let's say we enter the market. We now have this area to put our stop loss below, and we target the same level as before, and you can see our risk to reward has increased massively. In this example, it was previously a 1 to 1.6 and it's now a 1 to 4.27. So as you can see, just by being more patient within the market, waiting for that extra confirmation, not only does it increase our win rate, but we can also increase our risk to reward ratio. So just to summarize, guys, being first into the market doesn't necessarily mean more profits. Being patient is the better thing to do as it can increase our probabilities and our risk to reward ratio. But anyway, guys, that's the end of the video, and we will now go into the outro. Thank you for watching the video, guys. If you enjoyed it, make sure to leave a like and a comment in the comment section below. Let me know your thoughts. And if you want to join my VIP mentorship group where I go live at least 3 times a week, breaking down my trades and all my analysis throughout the week, then just click the link in the description below. Have a great rest of your week, and I'll see you in the next video.